With these jobs numbers, all of a sudden, this is now a much more important data point, and markets took this as a sign that rate cuts actually might happen a little sooner again now. Good afternoon. Hope you're enjoying the much warmer weather and the sunshine here in the Pacific Northwest. We have a lot to cover this week, and a bit of a turn in terms of what we're going to focus on as well, because post-Fed meeting, the market is really turning to jobs numbers as well as the earnings for kind of direction as we look ahead. My name is Brandon Steele, financial advisor with Mainsail Financial Group, and our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a little bit of the noise along the way. And this week, I'm excited to dig in. We will skip the question of the week because I am at a industry event here today. But nonetheless, we do have a few things that are a little bit bigger to cover and may also kind of factor into the new focal points for the market ahead. A bit of a shift, although I won't say away from the Fed, a bit of a shift from just inflation in the Fed. So the first thing I want to highlight is last week on Friday, we had non-farm payrolls come out, so jobs added. And basically what came out is that it showed that we only added about 175,000 jobs, whereas the expectations coming into that data print was that we were going to add closer to about 250,000 jobs for the month. So this was the fewest in 6 months. And I think what's also important to highlight is that many of the recent jobs numbers, these non-farm payrolls numbers that we get once a month, have actually been revised down. And there has not been a lot of conversation about this, but it's really important to note that, because even with this being the fewest jobs added in the last 6 months, and looking backwards, we've had some surprises on the upside. The reality is that the numbers aren't quite as strong as they had been looking. And basically we kept getting revisions afterwards that brought some of those numbers down. We've had some revised up as well, but overall, the total jobs added have certainly not been the same level as what we get on the first report. We'll see ultimately if this comes down as well, but nonetheless, not a great number here this Friday. And the reason this is so important is because this is likely what the Fed was referring to last week. So if you haven't tuned into our weekly webinar from last week, definitely take a look at that one as well, just to catch up a little bit on the Fed meeting last week and some of the focal points. But this might be what they were referring to and why jobs are now all of a sudden kind of in the mix for rate cut timing. With these jobs numbers, all of a sudden, this is now a much more important data point, and markets took this as a sign that rate cuts actually might happen a little sooner again now. And I would highlight that again, the reason for this is because the Fed shared this directly. Up until this point, again, definitely tune into last week's session if you haven't seen that yet, but the short version of it is that up until last week when the Fed spoke, the conversation has been entirely around inflation. Now, all of a sudden, they pivoted significantly and said, obviously they're still focused on inflation, but now they're really focused on jobs as well. And if they see a slowdown in the labor market, that would be enough for them to reduce rates, basically, which was a whole new factor in the mix. And so we saw some results of that on Friday. The second thing I want to highlight is, again, in this new focal point, jobs is one of them. The other thing is that earnings, I think, are going to be really important as well. And I believe that the reason this is going to be important is because in the short run, let's say the next, little bit here, last week, this week, basically earnings likely will drive some of the shorter term market direction until we start to get inflation, jobs data, and the Fed, obviously, that meeting gets closer there in June as well. So we had a lot of big tech earnings last week. And what I want to highlight is, as of last Friday, some of the earnings updates. So last Friday, one of the things I want to touch on is that blended earnings growth year over year was actually up 5% for the number of companies that had reported within the S&P 500. And expectations were a decent amount lower than this as well. And so again, when we're seeing what kind of drives the markets from here, I think that that's certainly a big part of this story, is that earnings, so far anyways, have been strong. But this first full week, in May, there's seen some cracks in some of the earnings. So I will be very interested to see where we kind of land as earnings season wraps up, and we'll be sure to share that with you as well. But again, this is really important for the very, very short run until we get some more inflation data, some more jobs data, and ultimately, again, until we get a little closer to that the June Fed meeting as well. All of this, and even though, price to earnings are pretty high historically. Even with that, the current earnings beat, is showing that there's still a lot of optimism right now. So even though stocks are quote unquote expensive, we have seen that, these higher earnings are giving another little bit of a lag here as well. So we'll see where this kind of continues, and certainly share with you more as we wrap up earnings season as well. But coming up next week, we pivot right back to where we were, and we start talking about inflation again. Although, again, I do think that jobs are now all of a sudden a much larger, not larger, an important factor in the Fed's decision as well. But next week, we have consumer price index, we have producer price index, and we also have retail sales. So be sure to tune in next week. That'll be an important data point to kind of watch here ahead as well. Again, I will skip the question of the week as I am at an industry event today, but definitely let me know. Feel free to comment below if you have any questions, and we'd be happy to address them here in our upcoming weekly updates. In the meantime, enjoy I think it's 80-degree weather this coming weekend, and we'll see you next Thursday at 3.